Hey, rich friends, it's your girl Cha-Cha, reporting live from the Money Mantra, and we are back with another Forex education video. I do want to welcome everybody back to my channel, whether you are a new or returning subscriber. I do appreciate everybody who is taking the time to check out my content, to engage with it, and especially the people who have really took a leap of faith and registered for personal mentorship. Trading is simple, but it's really not easy. It does help to have a mentor. So if you're looking for a structured learning program and a community of traders, you can join the Money Mantra by registering for personal mentorship, and that information is down below in the description box. If you want more information on how to use the app or website and get familiar with it, I will tag the video here so that you guys can check it out and get acquainted. But in today's quick video, we are going to be going over a trade breakdown, which is pretty much where I review all of my wins and losses, just to give you guys a realistic perspective on what it's like to be a trader in the market every single day. Now, we don't win every trade and we don't lose every trade, but as long as you focus on having a higher win rate than lose rate, you will be fine. So in today's video, we're going to be going over a GBPJPY trade that was posted on January 14th, 2024 in the chat for the students who are receiving mentorship at this time. Now, GBPJPY is short for the Great British Pound versus the Japanese yen. And what we are looking at right now is the 4-hour chart. So the trade idea was recommended for a buy, and it was suggested that they get in at market execution or set a buy limit, which is a type of pending order you can use to enter the market. I did give a suggested entry point with the recommended stop loss and a few take profits that would give people some flexibility to enter into the trade. So we're going to go back to trading view. And we are going to see what actually happened in this trade. So this trade was dropped around, we're going to go back to the beginning. This was around 7 p.m., around 8 p.m. on Sunday. So it was here. So we're going to put the chart in replay mode. I'm going to walk you guys through my thought process, why I decided to take this trade for a buy. And then we're going to see what actually happened. So this is my entry candle. So the first thing I noticed was that the market was in a demand zone. Now there are two places that the market could be. It could be in a supply zone, which you'll find at the top, or it could be in a demand zone. So a demand zone is very similar to something called support when it comes to trading. And this is typically a place in the market where people tend to get in for buys for a number of reasons. And I'm going to show you guys some other demand zones so that you can see what I mean. So this was a demand zone. We can see that the candles were consolidating or staying in this area, and they weren't really getting lower than this. That would make this a strong demand zone because every time the candles came close to this area, it rejected and it eventually went up. So that is what support and demand areas tell us. Support and demand are the same thing, and supply and resistance are the same thing. So from that example, I noticed my candles were in this buying area. That was my first confirmation to get in for a buy. Now you'll notice I have these two lines on my chart. These are called EMAs, and they just give us a glimpse into what the overall trend for the market is. And again, I'm just going to zoom out so that you guys can see whenever the candles are above one or both of the EMAs tend to act as sort of like a trampoline, and the candles are bouncing off of it, making the EMAs a great place for entry points, whether you're buying or selling. Now, when I scroll back, you can see that when the candles fall below one or both of the EMAs, the market tends to sell down until it reaches previous support or demand area. So I noticed that my candles were pushing into this buying zone and it was rejecting going any lower. The next thing I noticed was that at the bottom of my chart, I have my momentum indicator here, and I have my stochastic oscillator here. Now, the way that I use these indicators are pretty simple. When they are facing up, it's usually a reflection that the market is going up as well. And we can see that example from here. We see that the market was going up. It was above both EMAs, and we also have the stochastic and the momentum in the upward direction as well. So I noticed those things. Those were the 4 confirmations that I needed to take this trade for a buy. I always say 3 confirmations are good, 4 confirmations are great, and 5 confirmations are fantastic. So let's just review the confirmations again. The first one is the candles were in a previous demand zone. The second is that the candle was above one EMA. If it was above both, it would be better, but one, I'll take it. The third confirmation was that my momentum indicator was facing up. And the fourth confirmation was that my stochastic was also facing up. Now, what I've noticed about JPY pairs personally is that they do tend to move hundreds of pips in a day. So I did set a 50 pip TP as my TP1 and 100 pip TP as my TP2. So we're just going to go ahead and plug in these numbers. We're going to play this trade out and we're going to see what happened. We can see that eventually the candles did cross above the EMA. Actually, on the very next candle, it crossed above the EMA and it closed, which is a good sign for a market that's trending up. And then the rest of our confirmations continue to hold true with the stochastic facing up and the momentum facing up. Hence why this trade was able to hit TP2, was able to hit TP1, I'm sorry. And yeah. So that's all I have for you guys today. I really hope that this was helpful. If you want to see more trade breakdown videos, make sure you check out the Real Wins and Losses playlist, where I do review as many trades as I take as possible, just to give you guys a cohesive and realistic way of looking at the market. So yeah, guys, until next time.